And so we're going to start with the P&L. It's a bit easier to come by for most who are a little bit more concerned with whether or not they're making money than what their assets and liabilities might be. And so kind of following maybe the handout you have in front of you or on screen here, what I did the other day before I was scrambling to get out of town was cobble together a balance sheet and P&L for a kind of 600 account dealer and do both the lease here, pay here, and buy here, pay here equivalent. And so you should have access to that. So we're going to start with the P&L, and really what your P&L shows is over a period of time, it's giving you your revenues, your expenses, and as a result, your net income or loss. Pretty straightforward. And when I talk about revenue, I'm talking about things focusing on the lease here, pay here dealer, doing the operating lease. I'm talking about things like your rental collection revenue, your down payment income. Those are going into this lease income line. But I'm also talking about true sales from things like retail, residual, or wholesale. On the cost of goods sold side, which is the next line down, we're going to have the cost reported for any of those true sales from retail, residual, or wholesale. But here's our first big distinction, right, from the buy here, pay here, to lease here, pay here dealer doing the operating lease. When we send a vehicle out into a new lease, I know it's common around a dealership to say, you just bought a car, we just sold a car. Well, technically for book and tax, there's no sale. You simply retain ownership of that vehicle, move it from inventory on lot to lease inventory or leasing assets, leasing vehicles, something like that, and collect rental revenue and depreciate it over time. But on the buy here, pay here side, we trigger that sale, that cost of sale, and that gross profit right up front. And so to follow from there is really going to be a catch-all for the rest of our operating expenses. Your people expenses, your rent, your utilities, anything else really. Interest expense on debt is all going to go there. But then comes that second distinction from buy here, pay here, lease here, pay here is, on the buy here, pay here side, we're recording that bad debt expense for, the principal charge-off on any of our notes. Well, we don't have that in that manner, I guess, for leasing. Instead, we're going to recognize our depreciation expense. And so this is a big one, often missed or miscalculated by lease here, pay here operations. This is a required form of GAAP we're going to talk about in a second. When you retain ownership of an asset, you depreciate it. And so a quick example might be, for book purposes, you buy and fix up a 2015 Camry, you're all in 10 grand, which I don't know, that could be a little bit low these days. And so it's January 1st, you send it out into a lease, and you might decide that vehicle has 5 years left of life. Well, by December 31st, you will have taken 1/5 of that vehicle's value, or 2 grand, as depreciation expense that hits your P&L. And so that goes across all vehicles that are out on the lease throughout the whole year. And so then the net of your revenues and expenses is just going to be your net income or loss for a period. And so what I'm alluding to with things like depreciation is when you're reporting your financials to an outside party like LHPH, or you go under audit, you're required to report them under GAAP basis accounting, generally accepted accounting principles, or accrual basis, you hear that term used. And that differs from cash basis, right? And so it requires you to record revenues as they're earned and expenses as they're incurred. Depreciation is a form of this accrual basis accounting. Another one that I think is a good example to think about is property taxes, right? So we're all levy tax on the vehicles that in many jurisdictions is levied one year but due the next. Well, GAAP basis accounting requires that we hit our P&L in the year in which that tax is levied, because that's when it's incurred, even though the cash doesn't leave the business until